Recording.
Yeah, so this is going to be recorded. I'll just throw it up on YouTube after the fact, if anything, just so people that miss it can actually watch it, because I know this is kind of late in many places all around the world and that kind of shit, you know? So where's everybody from though? Where's everybody from? Miami, Hawaii, California, Jamaica, Bronx, Canada, South Africa, Montreal, Atlanta, Sudan. There's a lot of Jamaica. Brazil, New Zealand, Costa Rica, Houston, Boca, Ohio, Pakistan. God damn. Well, thanks everybody for coming on here. Really, really appreciate it. We're definitely gonna put in some work. First of all, what pair does everybody trade though? Because me, like, I've dabbled in so many pairs over the course of 10 years. And I mean, I'm kind of stuck on like one pair now, but I like to, focus on like one thing at a time. You know what I'm saying? Like, I hate jumping pairs too much, but I do analyze a lot of pairs just for the sake of all of my students and that kind of stuff that pretty much want to trade with other pairs. So I try to actually give that value in some kind of way as well, just so they could benefit. A lot of gold, a lot of US 30. I think Euro USD is probably the only thing I don't analyze. I think it's because it's probably one of the most inconsistent pairs that I've actually dabbled in. GU every now and again. NQ, okay. US 30, US 30. All right, bet. Ethereum, okay. Cryptos every now and again. BTC, okay. Cool. NQ gold. Okay, gold wins. GR30, okay. So I'm busy. Hold on. Soil. Bet. Okay. Well, for one, let's start to get on the charts. So I like to actually chart a lot of my things on TradingView for just more of a sake of the charts actually saved, as far as all the templates, all the markups and that kind of stuff as well. And then when it comes to like me actually doing like my charting, I do also markups on TradeLocker as well, because that's what I'm going to be trading on as well. So like it's pretty much like the most easiest thing for me, in fact, that if you're going to be trading and charting at the same time, I think it's the most easiest on TradeLocker, because it pretty much uses TradingView charts anyways. You know what I'm saying? So how many Wall Street Academy students are in here before we actually get on the charts though? How many Wall Street Academy students are in here right now? Yeah. Decent amount, for real. Active. Damn, yeah, we got like about a good couple hundred inside here right now too. How can I join? How can you join? To join Wall Street Academy, all you do is pretty much just go here. I'll be actually doing a few things with Wall Street Academy for this upcoming like maybe 2 months, because I have a mentorship that I'm doing on the 25th. One-on-one sessions and that kind of stuff for the 6 months. So it's a 6-month program technically. So there'll be actually, it's gonna be limited, probably like maybe max 25 people, 30 people for 6 months. Focus on those people, have my phone number, that kind of stuff, FaceTime, one-on-one calls, all kind of other stuff as well, private Discord at the same time. So it's gonna be a lot, you know what I'm saying? It's definitely gonna be a lot to actually take in, but that's what we're here for though, you know what I'm saying? But let's get to it. Let me just share my screen real quick. I'm gonna get to the Q&A soon, actually. All right. So I like to actually cover a few pairs at one time, because so today I was only planning on doing. Why can't this get a little bigger? I was only planning on doing a few pairs. So we are going to tackle US30, we're going to tackle UJ, we're going to tackle GU, and we're going to tackle gold so far from what I mentioned actually. So go a little bit in depth, things that I'm looking for. And for one, at the top of the week, each and every single week, I want to tell you guys, you have to always be aware of like what's actually going to be happening this entire week. So this entire week so far, we have FOMC. FOMC we have on the 19th at 2 p.m. red folder, right? We have FOMC at 2 o'clock, 2:30. We have FOMC press conference. You have news on the 17th as well at 8:30, core retail and retail sales, red folder as well. And then on the 20th, you have unemployment claims, red folder at the same time. So it's a few things. The biggest thing this entire week is going to be FOMC, which personally I don't even try to dabble in, for the main fact that it's getting close to Sydney session, which means that like the market actually slows down a lot. And volume wise, it gets very sloppy. I wouldn't even recommend it. But if you're the kind of person that pretty much has like extra accounts that even like mess with FOMC, by all means. But I just feel like it's not really worth it. I would say just wait until after the news actually hits to then actually try to even catch some kind of move in some kind of way. You know what I'm saying? But I wouldn't even take on the risk if you don't have to. You know what I'm saying? It's very risky. But I'm all about a risk still. So like if you're about that life, I don't blame you actually. But at the same time, just if you haven't ever experienced a red folder, especially like FOMC, CPI, NFP, things like that, I would say just watch it. If you have experienced it before, get on a small account and actually do it that way. Because if you try to trade it with your main account, the worst thing that can happen is you experience slippage, and then all of a sudden your stop loss that you pretty much thought was going to save your account gets missed, and all of a sudden you're losing a ton of fucking money for no reason. You know what I'm saying? But first things first, let's tackle this. All right, so this right here is going to be US30 first. So on US30, like I always like to mention that at the top of the week, Sunday, I hate trading when it comes to like, market open up until even tomorrow. You know what I'm saying? For the main fact that there's no kind of volume up until like around 5 o'clock or even 6 o'clock a.m. the next day. And those that are asking for my MAs, get in Wall Street Academy. I'm not going to be on here just saying all kind of shit. Now, invest in the actual course so you could actually be a part of every single thing that we talk about in Wall Street Academy. You know what I'm saying? But at the top of every single week, even when market open, like US30 always looks very tempting. You know what I'm saying? But it's always that temptingness that pretty much makes people lose unnecessary money. So I always say, wait until the next day, right? Wait until, again, like at least 4, 5, 6, 7 o'clock in that range when market actually picks up a good amount of volume to then try to actually trade the market at that point, all right? Right now, it doesn't make sense. You might be stuck in drawdown for the next couple hours and that kind of stuff. Plus, even like get thrown off by your opportunity based on the volume not really being true volume like right now. So even though like we're gonna be analyzing like right now, I would not even recommend even fucking dabbling in no kind of trades right now up until, right? If you're trading currency, it's a little bit different. But at the same time, like me, like 30 is like a main thing that I actually trade. So those that also trade 30 as well, take that recommendation, sit it out, sit on your hands and everything for the next 3, 4, 5, 6, like 7 hours, and wait until the next day to actually take advantage of the volume that kicks into the market at the top of the day pre-NY session. You know what I'm saying? So first things first, I like to always see like what the overall trend is when it comes to a certain pair. All right. Hold on 1 second. Good. Cool. All right. So overall, we are on a strict downtrend like right now. The market has been very sloppy throughout this entire range. So like I like to actually pinpoint key points of this entire market. I'm very focused on a few things like when it comes to these areas like right now. For one, this area right here, which could be often hit by some sort of spike in some kind of way as well. You have a couple exhaustion zones like right here at the same time. So we got to actually keep that as a pinpoint as well, right? You actually broke a minor level of resistance like right here at the same time, and with a little shift of the MA. So I'm very, very focused on like how that could actually look, right? So I'm not super focused on when it comes to the potential chance of an uptrend, but at the same time, knowing that it's still an overall downtrend, and most of the momentum like right now is still pushing down the entire time. A few things that I could look for, right? So for one, on the H4 time frame, we see that this area has potential to actually keep on rising up just a tad bit more, right? It could even go all the way up here and still be considered as a downtrend without having a shift in the overall structure in any kind of way, right? So a few things. Notice that on the daily time frame, you pretty much have a big bullish candle. That's cool too, but at the same time, like I'm not really focused on that like right now, because I want to pretty much confirm where the overall momentum shift is pretty much happening within this entire thing. I see a few things. I see a minor break of this level of resistance. I see all of this exhaustion like right here as well. And even like right here, you're starting to make a little level of support at the same time. So knowing that it pretty much broke a little level of resistance, I'll put my fibs, point A to point B, based off of that entire area. We came all the way down to like our 23.6%, which in Wall Street Academy, we consider this area to be a high momentum opportunity for the main fact that majority of that volume is still in one direction, the entire time. So I'm not going to be too focused on the fact that it could actually just, let's say, yes, spike, but at the same time, like I'm trying to see like if it could maintain that certain level of volume to then push off of that 23.6%, knowing that it's starting to actually slowly break the MAs. All right. I like how on the M30 time frame, you're starting to actually see a breakup of the MAs as well. That kind of shows you that the resistance is slowly starting to break and things are slowly starting to shift at the same time. So yeah, like I wouldn't even consider like my chart super naked. It's kind of like my chart's got like a bikini on. I wouldn't even consider it naked charts. It's like more of a bikini type thing because it has a little bit. It doesn't have too much, but at the same time, it has just enough to even like hide certain things. You know what I'm saying? But hold on, wait 1 second. Text. So yeah, so like what I'm looking for now, based off of where this area currently is a few things, right? So for one, I like how this area where this bounce is currently going. I like how this is actually respecting a certain level of support, like right here, right? Right at 23.6%, along with in the past as well, it's starting to actually bounce off of all of these exhaustion points all over here. So I'm gonna actually point that area off. All right. So my overall goal for this entire thing is, I told you, like max, I would say somewhere within this entire range. And remember, this right here is like a counter trend at this point in time, because for the main fact that me seeing how the H4 looks, even the H1 looks, like it's still looking very bearish based off of how strict the MAs are actually pointing down the entire time. So all of this momentum is pointing down there. Bikini trading, exactly, right? It's not fully negative, but it's a little bit, all of the bearish momentum is very high within this entire H4 setup. So you even seeing what's happening on the daily time frame, I don't really focus on that too much, but at the same time, for what it is like right now, knowing that the momentum on lower time frames is still pushing up based off of M30, M15, it still has potential to keep on pushing up, but I'm still gonna be focused on the main fact that the main trend right now is still a lot more bearish. So you could actually ride this counter trend for what it is, but at the same time, don't commit too much. You know what I'm saying? For the main fact that majority of the volume is still bearish, right? You might see a nice push up and all these things, but at the same time, this is not the kind of trade that you're gonna be able to swing too much. All right. So let's keep that in mind. All right. So knowing that it's looking like this, like right now, you still haven't actually fully established for the main fact that you have a full candle that pretty much has enough volume to keep on pushing. Like right now, again, you still have a lot more time to wait until this candle can actually build up. We have a good 7 hours, so we have a couple like 2.5 H4 candles. Two H4 candles to actually fully form, and 7 H1 candles. So let's see if the H1 candle can actually even fully pass this range, like right here, right? to then fully establish the overall shift in this entire volume that's currently going on like right now. All right, knowing that it's still respecting this level of support, it's still above the MAs on this time frame as well. So it's starting to actually use this level as some form of a support the entire time. So I'm going to be focused on that. And if I could actually get even just above this range, I'll feel a bit more comfortable with taking those buy opportunities when it comes time. So I'd rather wait until that tomorrow pre-NY session to then take advantage of that entire area right here. So that's what I'm going to be focused on, like right here for US 30. And I'm focused somewhere around negative 27%. So I could actually put this range right around here. All right, I like to mark that area off as a green range at the same time. All right, I like how the H4 candle is actually starting to form as well. You have another 9 minutes left inside this H4 candle, and I like how it's actually starting to close with a nice pullback based off of that H4 candle and H1. So if this actually pushes up a tad bit more within these next 9 minutes, that'll make the H4 candle a bit more appealing as well, and it can look as some formation of like a doji type thing if it does actually pull back a little bit more on the H4, which is a push up on the H1. So let's focus on that within the next 9 minutes, and even I try to track this when it comes to this upcoming day also. Some webinars are 2 hours. Yeah, on Wall Street Academy, I have a lot of webinars that's like even an hour and a half, 2 hours. So just on webinars alone, we probably have in Wall Street Academy maybe at least 115 hours of webinars in Wall Street Academy, like right now. So what time frame am I on? Is this your first time on TradingView or some shit, or crazy? Just look in the background. H1. Right now, this is right here is the H1 time frame. Yeah, this right here is H1 time frame, so you can pretty much like catch a lot of it. Like, okay, so the biggest thing that I try to tell traders as a whole is there's never, ever like one time frame for every single thing, ever, right? You got to be very, very dynamic if you want to be that person that's like that trader that can actually, you know, not trade at any time of the day, but pretty much be able to analyze the markets at any time of the day so you can actually understand like what's going on and like what you're waiting for. Because if you're not able to actually analyze at any time of the day, then you will be stuck on the mindset that you have to pretty much analyze at a certain time of the day. The markets are always active. You know what I'm saying? Like if you have the ability to actually read the charts at any point within the day, that's good. That means that you're able to actually keep track of where the market is, where the market could go, and then from that point, you're able to actually, you know, make better moves or better decisions on that kind of thing. So now it's just a waiting game. You know what I'm saying? So let's just see how this can actually closes out. Again, I'm looking on the 15, I'm looking on the 30, I'm looking on the H1, like right now for like my focus time frames. And we can see how this can actually play out based on that right there. So key things that we're looking at like right now is this area acting as a form of a level of support. All right. This area like right here also acting as a level of support as well. A lot of exhaustion on the bottom end. You are on 23.6%, which kind of shows that there's a lot of momentum for that bullish side, like right now where it currently is. And on the M30 time frame, you have a lot of slow movements like right now also. But at the same time, like we would love to see this area actually break above this. If it does break above this, then we'll be more comfortable for the buy opportunities. But like right now, it's in that range that's very, very sketchy. So like let's just wait it out, right? You have a bit of confluence all along here as well. Let's try to actually point this area out just in case, right? All right, so this area like right here is like a max retrace that we could actually experience. Worst comes to worst. This kind of thing normally happens on like a news event. It could be on even NYC Open. You could have these drastic moves and that kind of stuff. But like right now where it currently is, like let's try to actually see if we can stay above this line like right here, which in Wall Street Academy we call a random line, and then pretty much see if that area can actually stay respected. If it does stay respected, and then pretty much build up that volume where that area currently is, then we can pretty much take advantage of that. All right. But let's try to see if this area can actually stick above that. If it comes below this line, then we can actually aim for around that 38.2%, or even this MA that's like right here, acting as a level of support, and then pretty much still be in the range for a bullish type move based on this market still being in the overall bullish type area like right now. But again, this this range like that's currently in is only so good for so long, right? For the main fact, like I mentioned, there's a lot of bearish momentum on that H4 time frame, which means that a lot of moves that you might experience, it could be very, very aggressive bearish moves, right? Knowing that it's like all the pressure that's pushing down on the top of the market, knowing that that's where the majority is. You know what I'm saying? So you got to pretty much wait out until the volume can actually build up to then take full advantage of these moves right here. But again, we got to wait a good almost 7 hours before we can take any kind of opportunities and go from there. So it's a patience thing, no rush thing, especially when it comes to US30, knowing that it's a very, very aggressive pair. And yeah, it gets busy. You know what I'm saying? So next thing. Next thing I'm going to say is UJ. Okay. USDJPY. First things first. So last week we were analyzing this pair. All right. We were mentioning that we pretty much had like a slow shift in this entire market. All right. As you can see, so like when it comes to UJ, like I think H1 is probably the main time frame that I'll probably stick on the most, like when it comes to UJ, for the main fact that it shows the most cleanest structure, like where it currently is, like right now. Again, it's never a fixated time frame that I'm focused on the entire time because things do change. Things do change, and you could pretty much have at one point you might have a tight consolidation zone, which is like only like around 23.6% on like a fib. You can't analyze that on higher time frame. You got to pretty much analyze that on a time frame that pretty much has a bit more detail and that kind of thing. So it's always shifting. It's always gonna be shifting in some kind of way that you got to pretty much pick and choose what time frame is the best for what you're currently analyzing at that point in time. All right, it's never just always H4, always H1, always daily, always this. It's never always that. All right. And like when it comes to trading as a whole, like I tell all my students, like you have to think like a trader, all right? You got to pretty much use the tools that have to be used for that certain situation or for that certain environment and that kind of stuff, right? It's never just it has to do this, it has to do that, it has to pretty much form this kind of way, it has to form that kind of way. You have to be dynamic enough to even like adapt to the markets as it's flowing because it's always changing. It's always going to be looking a little bit different. It might not look the cleanest, but at the same time, as long as you're able to actually comprehend it based off of, how sloppy it might be or could be, then, I mean, that's all that really matters. Like you actually making sense out of something that doesn't look like it makes sense at all, honestly. So we are focused on, for one, like the build up for this entire shift in structure all throughout this entire range, like right here, right? You pretty much had one area that was being heavily respected, like all the way down here, all right? Let me just put these areas off a tad bit. First of all, let's try to actually see how this looks on like a broader perspective real quick. Okay, so for one, wow. Let me see how this looks on weekly real quick. Cool. Slow shift. Okay, cool. I'm gonna just highlight these areas just in case, but at the same time, like all these things are still somewhat irrelevant in some kind of way. So I'll try to actually mark the areas off. That right here is like a full retest of the entire area as well. And I'm gonna also keep in mind these points as well, just in case. So this area is not fully broken as of yet. So I'm gonna definitely keep this in mind, just based on how it's actually forming. So I'm not gonna consider this area fully broken as of yet. So just keep that one point in mind. All right. All right. So for one, I'm going to focus on like the H1 time frame here first. You pretty much had a shift here. All right. You had the MA's cross as well. That's very cool. Nice. I like how this pretty much made new high point here. So I'll put my fibs from point A to point B here. You had a nice 61.8% retracement. Just mark that area off. A lot of confluence over there as well. So cool. So things like this, again, have your aim in mind. You know what I'm saying? Have your aim in mind. You have a main fib there. You pretty much had another break of this level of resistance as well. All right, which is beautiful. All right. I love how the MAs are pretty much acting as a level of support as well. Perfect. Cool. All right. All right. Cool. Nice, nice, nice. And this area, like right here, is acting as some form of a consolidation range. So to even like analyze like what's going on, like right here, I'll be focused on probably let's go on M30. So overall, like we kind of know where we're aiming. You know what I'm saying? So like where are we aiming like right now on UJ based off of like where it currently is? Like where am I aiming, you think? Like what's my aim? Correct. Buys. Like my overall aim like right now on UJ is buys, right? So me seeing all this level of consolidation, I'm not even like focused on like, what's going on like right here. Even me seeing even all this is not gonna really scare me all too much because remember, like even within this entire zone, you have a few things that's currently going on like right now, right? You have all of this exhaustion like right here based off of all these candles, right? 1, 2, 3. All right. You have this exhaustion like right here as well. You have this support level based off the MAs like right here as well. All right. Um, Asian session is pretty much now, but this market doesn't really move in Asian session too much, honestly. And I want to actually also create a sub fib, which I like to actually call a sub fib, which is two fibs in one as well, based off that entire area. So like I love how this area pretty much came down to our 38.2%, which is our first area of structure as well. All right, keep that area in mind. All right. So within this entire range, cool. Fluctuate all you fucking want. It doesn't even matter to me. All right. I want to see how this candle closes, which it closes in 28 minutes based off of your M30 time frame to see like if this area can actually be respected based off of this current range where it currently is. And I just want to see like some sort of like a nice bullish variation, which is like what we call in Wall Street Academy, which is like different variants of bullish engulfings, to see how that area can actually fully close out, and then actually look for a buy opportunity based on that as well. So like max time frame lowness that I would actually go on this pair is probably max 50-minute for the lowest time frame. All right. So 15-30 could be like my time frames that I'm focused on majority of the time, like when it comes to analyzing UJ. So you got to pretty much just look at the candlestick analysis, like when it comes to these two time frames, and then go based on that right here. So again, we got to see like how this area is going to pretty much fold out. If you could actually maintain this certain level of support the entire time, and then pretty much come back up to create some formation of a bullish type of engulfing, some kind of variation, to then say we are ready for this kind of opportunity. Because remember, like when it comes down to it, like we seen a few options or reasons as to why the support area can actually still be maintained. And those areas are based off of the MAs that we're seeing like right here. This blue line like right here, which is based off of the 15-minute. And on higher time frame analysis, you pretty much had a nice shift in momentum as well, which I think we based this on H1. So we got to see how this actually closes out and go from there. So like right now, it's pretty much in like the mid shift of, I would say like a mid shift in the entire trend change. So again, like when it comes to like the market being in between these MAs, it's always kind of a little bit of consolidation. So you got to pretty much wait it out to see like, and if it could actually, make a nice clear direction before you even like pull the trigger. Because like right now, you don't want to be in the mix to be in the wrong direction. So always best to wait it out. Always wait until your candles are closed fully. Because remember, a candle that's fluctuating, it could just be one way 1 second, and by the time it closes, it's in a whole another fucking like anatomy. You know what I'm saying? So you got to pretty much wait until these candles are closed to then try to attack the market in some kind of way. All right. Things like this, like right now, you have 26 minutes left. Wait it out. Wait that shit out. Or you can go to the M15 time frame. You know what I'm saying? You try to actually, you have a less time to wait it out, but you still have to wait it out some kind of way. So On 15-minute time frame, you can still have a little bit of confirmation based off this time frame, but you have another 10 minutes to wait. So either wait for a 30-minute confirmation, which has another 26 minutes, or wait for another 10 minutes for a 15-minute confirmation. Either or, whichever one actually looks the best by the time it closes, go based on that right here. But these are the areas that we're looking at like right now based off of where this currently is, and we're gonna try to stick with this analysis to see how things can actually play out once everything's pretty much closed out. So pairs, well, currencies it's not like a thing that I feel like you have to wait too much. Because a lot of time, like when it comes to even like market open gaps and that kind of stuff, when it comes to currencies, you're always feeling very quickly compared to indexes, metals and that kind of stuff. So you could definitely take advantage of like these kind of moves and everything when it comes to these compared to other types of different assets. Would you not be looking for sales because H4 is sitting on a 61.7 retracement book? So me, no, honestly, like I mean, based off of how H4 looks, like it's not really showing me too much selling opportunities like right now, because remember, it's still making all these higher low points on the bottom end. Despite how this looks, remember, H4 candle still has another 2 hours and 54 minutes left. You still have a good amount of time. So you got to pretty much wait to actually see more, or wait until that H4 candle even comes close to closing to then confirm that what you're seeing like right here on H4 is real, all right? So these big candles, like it might look like this like right now again, but at the same time, like if it's not close to closing, then it doesn't really, you can't really use that as like a reasoning like right now, because it's not close to closing. It has almost 3 hours left until the H4 candle closes. So I wouldn't actually base much confirmation off of H4 like right now, because it's not real. It's like you trying to it's like, let's say the first day of a month, you're looking at the monthly candle and you're trying to say, oh shoot, it's bearish because the first day is bearish in this monthly candle. That fucking candle has another 30 days. So it's not really real yet. You know what I'm saying? The monthly candle is probably only valid like probably the 25th day, 28th day. You know what I'm saying? Like, I mean, if you're in another month and everything besides February, but you got to pretty much wait until almost closes and that kind of stuff. But like right now, like you got to pretty much wait to see how these can actually play out. For here, we just want to see if it's able to actually respect this area like right here, based off of it being on majority of uptrend like right here, right? You have all these higher low points being formed. The MA is actually still being respected on the M30, and going from there. So overall, this right here is showing a lot more bullish area like right here compared to bearish like right now. So again, waiting game, see how things actually close out. We're waiting until the M30 or the 50-minute closeout to actually take advantage of this move to see if we could actually get a better type of analysis when the market comes close to closing. All right, another 22 minutes on 30, another 5, 6, 7, 8 minutes on 15, and go from there. I got sales on 150 UJ. Yeah, I mean, hey, listen, like if you got sales on UJ, cool. That's on you. That's fine. I'm just telling you like my analysis. Five years in, and it's the best course of action. Yeah, man. Let's put in work. Guys, get in on facts. Big facts. All right, so next thing. GU. GU was a very interesting one, actually. So last week we were analyzing this in Wall Street Academy, and seen a few things, you know what I'm saying? Seen a few interesting things that we want to pretty much take note of, like when it comes to these kind of things. So you always want to pretty much always take a step back to see if you're able to actually see any kind of potential patterns and that kind of stuff, like when it comes to these broad pairs. Few things. All right. All right, one main level of support being respected there, right? Always try to point these things out, like right here as well. All right, all these areas are still being respected at the same time. I need to see, so like what I was saying earlier, right? Like these tight areas, you can't analyze on H1. These tight areas, you can't analyze on H4. You can't do it. Like you can't analyze this. You can't analyze this too much. What do you think I got to do? What do you think I got to do? Detail. Like I have to see the details. Like if I can't see the details, I can't analyze. Simple as that. I have to see the details. I have to see like, the flow. I have to see all those things. All right. So this right here was a descending triangle that we spotted on last week's chart and chill. All right. We pretty much had this area right here being like one level that was being respected the entire time based off of this entire range down here. All right. Boom. Mark the area off. Cool. All right. We have this range like right here, but we've been analyzing this entire descending triangle for quite a while, ever since it was somewhere within this entire range. And this one level of support was definitely being respected heavily, right? But again, so for GU, I'm looking at this area to be a bit more bullish than bearish, like right now, based on a few things. For one, you're on an overall uptrend, right? For two, you haven't really broke any kind of major levels of support like right now as well, based on let's say the H1, H4, for the main fact that's where I'm going to see most of like the strong levels of support at anyway. So I'll actually base like my strong level of support like in this concept on the H4 time frame. So like what I'm looking for like right now is some formation of a break of this MA on the H1 and some formation of a break of the MA on the M30 time frame as well. Where it currently is right at the MA. So it's acting as a level of resistance, right? So you'll see this area actually get bounced off from. This area gets a little bit rejected and that kind of stuff. But remember, we are still within this entire triangle. So a few things can happen. You know what I'm saying? A few things can happen, which means that this market is definitely like liable to let's say, bounce all the way back down here, respect that area again. And what we want to see is just a break of this trend line like right here that we actually drew from this top down, right? And some formation of a retest in some kind of way. And it doesn't have to be a retest of the backside of this trend line, but we are hoping that it could actually get to a formation of some form of a 38.2% based on that counter trend to then validate that area to be some formation of structure in this concept like right here, right? So I'm still aiming bullish based on GU, despite it actually having a little bounce off of the MAs like right here as well. So again, all these things are definitely good until Wednesday, because Wednesday's FOMC. It could spike both ways. Who fucking knows? You know what I'm saying? So you got to actually be very, very open with, how things can actually flow. But on M30 time frame, like right now, you have another 18 minutes left based off of GU. On the 15-minute time frame, you pretty much have. I wouldn't even consider this very appealing too much on the 15-minute chart. I do like how it actually broke the MAs already on the 15-minute chart, which is definitely a good sign. And I'm guaranteed on the 5-minute, you are above the market again. So this right here is all good signs. So these things that you're seeing like right here are all showing signs that it's pretty much starting to get a little bit weaker based on that bearish side of things, like when it comes to this like right here. So I do like how when market open, it had a big gap. It filled the gap very, very easily. Like what I was saying, like when it comes to currencies, you fill gaps at times instant compared to indexes and metals and that kind of shit. So you're always gonna have a bit of a different type of conditions, like when it comes to currencies and metals and indexes. But based on like things like right now, like I love how this descending triangle is actually forming, especially how it looks on the H1 time frame. It looks very, very solid. I like how on the H4 time frame, you're pretty much starting to build up a lot more bullish volume. And I do like how it actually is not bouncing off of here too much, because remember, this H4 candle again has 2 hours and 46 minutes. So I'm not really looking at this exhaustion like right here on H4 like right now. It's not really scaring me in any kind of way, because that could easily change by one push up of a bullish candle. All of a sudden that wick that you're seeing on the H4 candle is going to be pretty much covered. So it's not really relevant like right now. So right now I'll be focused on the M5, the 15-minute based off of GU. Trying to actually take advantage of to see if this area can actually respect this level of support and maintain that level of support, and probably try to make new highs while breaking this level of resistance like right here and going from there. Fib wise, I don't really feel too confident with putting a fib like within this entire range, for the main fact that it's just very, very sloppy. I don't have a clear vision on how to actually put it like right now. I want to have a breakout first before I even apply any kind of fibs. I could probably put it on like a higher time frame, but again, It's not really necessary. It's not always necessary to actually put every single tool on the market. You know what I'm saying? It's not always necessary, because at the same time, like, it's always going to be things that you can just analyze with straight price action. You know what I'm saying? You don't need every single tool every single time. Like, I'm able to analyze with just straight price action. Cool, that's perfect, because you're able to actually understand your candlestick analysis, and you're able to actually, you know, put all these different confluences together to actually make it make sense and that kind of thing. So, like right now, it's just going to be just straight price action. Like right now, nothing really too much to actually do. Just as long as you're able to comprehend what's currently going on, then that's all that you really have to do. Like right now, and at that point, just wait and take action once you actually see the opportunity to even take that action. All right. So so far, again, AIM bullish based off of GU. And this right here is getting to that point as well, like how we had mentioned. Yeah, so UJ, we just finished talking about this like not too long ago. Again, it's starting to actually respect the area that we were talking about based off of UJ. Nice pullback based on that. Bullish candles are starting to actually come to the market as well based off of the M30 time frame. We have 14 minutes left there. The 15-minute chart is pretty much already closed out. Nice and doji, right? Like how we were saying before we even went to GU, this shit was all the way down here. All of a sudden, I told you, you can't trust candles until it's almost time to close. Before that, it could just be lying to you. You know what I'm saying? So candle closes are always very, very important as well. Like how we have mentioned, we're trying to actually just wait until this candle can actually show a nice bullish engulfing, a bullish variation in some kind of way to then take advantage of that opportunity as well. But again, I like how things are being respected here as far as the level of support. And yeah, this right here is our aim. If you already missed it, our overall aim for UJ is around like that 149,900 range. But you know, don't really watch this too much. Again, this has 2 hours and 43 minutes left. You know, a good amount of time left. A good amount of time left, and we're not going to really stress it too much, honestly. UJ, you're bouncing off that level of support again. You're just pretty much just bouncing. Overall goal again is max that 38.2% range, but also remember, time-wise, not really watching this all too much. It's going to be pretty much go all over the place until tomorrow morning. So right before NY session, I always analyze US30 because I want to pretty much update my analysis and seeing how things can actually flow from that point, and seeing how I can take advantage of it going into NY session and then into NYSE open when the volume is coming into the market. So that's our focus points to that point. Q, how do you place your stop losses, bro? Just it depends. Remember, in Wall Street Academy, I always say depends because remember, it's always case by case. But when it comes to US30, it's always I like let's say 100 points, right? So let's say, for example, like if I was supposed to enter somewhere within this entire range, right? And I entered, let's say, at like that line there, and where it currently is at 286. Oh, wait, that's it, 286. My stop loss will be at 186. So if I'm using a 2-lot, I'm risking 20,000. If I'm doing a 0.5, I'm risking 5,000. Point one, I'm risking 1,000, and so on and so on. But for this $1,000 account, like since the platform that I'm using pretty much is a little bit different as far as like with the margin requirements and that kind of stuff, and contract sizes, then I have to use a 0.40, which is equal to a 0.02 on a regular contract size, like what I used to use, like the same thing that I use on like my $2,000 to 50K build. First trades were a 0.02, I think, but I like dealing with that first because you know, I kind of like have to, you know, get some cushion inside the account first. It's not too aggressive, it's not too light, but at the same time, it's enough to actually catch a certain move. So things like this is like what I'm gonna actually be trying to catch first because again, like I only like to build on 30. So I'm gonna take advantage of these moves that I'm marking up like right now. Not on the currency, just only on US30. But so I'm going to be starting off with a 0.40, which is equal to 0.02. It's 0.02 on most platforms, for the main fact that the contract sizes are a little bit different. But again, the platform that I'm using, I have to use 0.40, which is equal to 0.02. Same shit, just in a different format. So that's what I'm gonna be doing. So I gotta pretty much plan it out and that kind of shit. So risk on that is $200. I'm trying to actually make around like $600 or $500 and everything on that first trade and go from there. Gold, last but not least. Gold is very, very smooth. Gold is very, very smooth. Emails. The gold is at a point where, you know, I was talking about it's gonna hit 3,000. It's gonna hit 3,000. It's gonna hit 3,000 like over like about a month ago. Hit fucking 3,000 very aggressively, and I feel like it definitely has room to keep on going. Honestly, like not even like a high 3,000, but definitely within like that you know that 320 range, that 340 range eventually. But definitely we could definitely aim for a little bit higher than this. Focus time frames. You always have to have a focus time frame because that's the time frame that you're going to be pretty much analyzing on the most, like when it comes to a lot of these things. So off rip, point A to point B on our fibs. All right, I like to actually do that. Let me see how H1 looks, just in case I can actually modify my fibs even a little bit. Yes, I'll keep it like that. Honestly, I'm not going to change it too much. So overall aim, I would say it's not even at that shit yet. Damn, that shit is light. Okay, that's my main level of support that I'm going to be focused on like right now. Cool. Okay, I do like a few things about this, like right now, right? Remember, and gold is another one of those assets that you can't just randomly fucking trade, because you're going to be pretty much stepping into an area where there's no volume, there's no kind of pushes, there's nothing. So you have to like wait this shit out and everything else to see, like, you know, when, like, you know, wait until it's in session to then take advantage of these kind of things right here. So like right now, it's just a lot of sideways consolidation. For the main fact, it's starting to actually make all of these lower high points as well. But and they're like, I cannot say that it's ready for a bearish move yet. Some people might be saying, oh, but it's a head and shoulder pattern. But yeah, but not really, right? If you understand what a head and shoulder pattern is, you got to pretty much do a few things. You can make a higher high. You can make a higher high, and then you can make a lower high, but then you have to break a support to then say it's a valid head and shoulder type pattern, right? Right now, it's not breaking anything. It's not breaking any levels of support like right now. So you can't really say anything like right now. It's literally just in the midst of just consolidating like right now before even saying that you can even think of anything like right now, right? So, but I would definitely try to focus on probably the 30-minute time frame at the most, and see if it's able to even like respect at least even this area right here by the minimum. But overall, like I can't say any kind of sell opportunities until it actually breaks this line like right here where this yellow zone is. So I'm still gonna say bullish based off of where it currently is. And as the night goes on and that kind of stuff, then I'll pretty much like be updating my analysis based on that. But like right now, like I can't see any kind of sell opportunities based on it not having any kind of volume for sell opportunities. You know what I'm saying? So you got to pretty much always, you know, analyze based off of like what's currently there, and then pretty much add to your analysis along the way. But like right now, it's just showing me still bullish moves based off of where it currently is, right? So focus time frames, the 15 to 30 minute, I think is probably the best time to even analyze this in some kind of way. What indicators are on my chart? It's not really any indicators on it. It's just two moving averages. Yeah, and like right now, again, it's just very choppy like right now as well. A lot of back-to-back dojis at the same time. So I'm gonna be pretty much seeing how that's gonna be playing out based off of this 15-minute chart. We still have another 6 minutes left within this entire time frame. Again, 6 minutes, a lot can actually change, and we want to just like, you know, watch it a tad bit. It's only 10 o'clock. No kind of volume is in the market like right now. Still have a good amount of time to wait. You still have London session that's coming up very, very soon. You still have NY session that's going to be pretty much showing a majority of the volume within these entire moves. But overall aim, like right now, would definitely be somewhere within this entire range, within this range right here, at the most, honestly. If this area was actually respected above this blue line here. So that's something that we're focused on, like within this entire area. I can't say again that there's going to be sell opportunities based on where it currently is until it actually comes below this orange zone, like right here. So like right now, we're going to be pretty much analyzing based off of where it currently is. Again, this candle pretty much still has another 5 minutes left, but where it currently is, it's not breaking any levels of support to even say otherwise, besides still going within that bullish range, and seeing the fact that it's still having a lot of indecision, like right here, all throughout this entire range, and not breaking the level of support. That's definitely a good sign. And on the M5 time frame, I do like how it's pretty much bouncing off of these MAs as a level of support as well, which is definitely a good sign that it's able to actually be respected in some kind of way. So we're going to be just looking at that, those few little areas like right now, to then take advantage of that when this area does actually develop a little bit more. We just want a little bit more of a development to take advantage of what's going on. Second, yeah. So to review a few things, we pretty much went over US 30. All right. Overall aim is negative 27% as a whole. We are overall saying that the max retrace that it could actually go is somewhere like around here, which we have a heavy confluence area at as well. Right now we are at 23.6%, which has a lot of momentum based off of that bullish flow. It's still maintaining that level of support the entire time, so it's still considered as bullish based off of where it currently is. Overall aim is that 41,750 area max. And again, this area can actually start pushing like around 4 or 5 o'clock a.m. Yeah, so let's take advantage of this. If you haven't took a screenshot already, just take a screenshot and save that. We have UJ as well. Save that. Did some work, you know what I'm saying? A little bit of work. GU, we did this as well. We said that we were looking for some sort of breakout based off of where it currently is. And based off of how on the M5 and the 15-minute, you're still above the MAs, which kind of shows that it's starting to break slow levels of resistance as well. We want to see a breakout of this trendline opportunity as well to take advantage of a new high, and to take advantage of a high low point when that area does actually form out. So a few things, you know what I'm saying? Gold, again, it's just in that short-term range, like right now as well. It's not really breaking any kind of major levels of support. So, throughout the night and everything else, just pretty much update your analysis based on these concepts, and see if you could pretty much, try to take advantage of this opportunity when it pretty much does hit. Okay. And again, this right here is the account that I'm going to be working on. So I have to pretty much update my analysis based on all these things. I put $1,100 inside this account, and this is the account that I'm going to be working with this entire week. For the main fact that I like to say 1,100 because I like to have a little bit of cushion just in case, kind of like how I did the $2,222 account. That $222 is just a little bit of cushion, so the market can actually fluctuate without throwing me off and that kind of shit, actually, because if it has to be decent for the first trade. First trade has to always be a good trade. So I wanted to just make sure. So again, I'm starting off this account with 0. Remember, if you have, so if you're on Trade Locker and your margin is at 413, that's pretty much where you want to be. So on yours, it might be 0.02, not 0.40. On this right here, so 0.02 and 0.40 is the same thing, but just based off of the details. The details are just a little bit different. The requirement and lot size difference is just a little bit different also. So that's why. So yeah, so same shit, but just different platform. So I'm going to be trying to take advantage of the opportunities that I pretty much just mentioned on 30. based on this, and trying to see like where we could actually go based on that right there. So yeah. MAs, please join fucking Wall Street Academy. I'm not giving out those certain shit. You know what I'm saying? Stop being lazy. But thanks everybody for coming on here. I really appreciate it. First time ever doing a chart and chill publicly. We are just about to hit an hour. Actually, hour just flew by. I'm saying, so thanks everybody for coming on here. Leave your feedback on, if you're on Instagram or if you're in Wall Street Academy as well. Leave the feedback in our Discord or our Facebook group chat and go from there. And I'm holla at you guys and update you guys on this account. If you're in Wall Street Academy, I'll be posting some updates on this analysis as well tomorrow morning, and go from there and see how we could actually take advantage of this $1,000 account. So thanks everybody for coming on, and I'm see y'all. Peace out. Thanks for the love. Peace.